Hi traders, it's Jay. Just wanted to share with you a quick video on Ninja Order Flow Trader and trade imbalances. The trade imbalances are something that's part of one of our indicators called the Order Flow Sequence Tracker. If you want to set up a one-on-one presentation of the NOFT, please email me, jtaylor@noft-traders.com. To purchase the NOFT, go to www.noft-traders.com/sales641. You can also reach me through Skype at jay.noft. So what are trade imbalances? We define trade imbalances as large differences in the number of contracts traded at the bid versus the ask. Now within the NOFT, the Order Flow Sequence Tracker has the ability to identify and to highlight them for you automatically. Now in terms of what constitutes an imbalance, you can decide what level of ratio will justify having it highlighted as a trade imbalance. So here we've got a chart of the S&P 500 E-mini futures contract on a 15-minute time frame, and I've just randomly took a section here. Looks like this is from about the London Open until just before the US Open, and that's the thing, imbalances happen no matter what time frame you're looking at or what kind of chart you're looking at, which I'll show you in a minute. So the imbalances, how are we comparing the ratio? Well, for instance, we're not comparing 0 on this bar here. We're not comparing 0 to 15 or 145 to 104 or 104 to 69. We're comparing diagonally because you've got to buy at the ask and sell at the bid. Okay, and so if we look at that particular candle there, we have a number that's highlighted in red. How I've got the NOFT set up, and you can adjust this, I'll just show you. In the Order Flow Sequence Tracker itself, if I go up to Trade Imbalance right here, under Trade Imbalance, I have it enabled, set to true, so it's going to show me the imbalances. I have Buy Imbalances set to blue and Sell Imbalances set to red. Another cool thing you can do with the NOFT inside the Order Flow Sequence Tracker is you can actually adjust the font size. So if I wanted to make the font bigger or change the font type or bold it, you have the ability to do that. Now for the S&P, I've just taken a random number here, but 300 seems to work pretty well. So the threshold, the ratio that I'm after in terms of defining an imbalance is 300% or greater. So anytime there's an imbalance of 300% or greater, it's going to turn the contracts traded at that level red or blue, depending whether it's a sell imbalance or a buy imbalance. So now let's look as we came up into this 2105 quarter, 2105.75 area. We came up into that level, and there was quite a bit of significant aggressive buying. You can see that in the blue numbers that are shown. And so when we come up into this area, all of a sudden, notice how blue aggressive buyers, blue trade imbalances, they disappear. I guess just to be clear, let's go back to that first example, that 145. Why was that turned red? Why was that 145 contracts traded at 2104? Why did it turn red? Because if we compare that 145 versus the 15 above it on the ask, well, obviously 145 is more than 300% greater than 15. And same thing on the buy side. If we look down here at around 730, on that 730 candle there, you can see there's a 947 contracts bolded in blue. What are we comparing that to? That 947 is compared diagonally to what was on the bid, which was at 311. So obviously 947 is greater than 300%. It's 300% or more greater than 311 contracts at the bid. So that's why you're getting the numbers in red and blue. Again, you can change that to whatever color scheme suits you. So how do we use this? Okay, that's great. We know that these imbalances are showing us where there's aggressive buyers or where there's aggressive sellers, or at least I guess I shouldn't say buyers or sellers, but at least where contracts were bought or sold aggressively. So as we come up into that 2105 quarter area, you notice that all of a sudden, if you look on this candle, there's no blue numbers. You look on this candle, there's no blue numbers. There are, however, some red highlighted numbers, the 307 at the 430 candle and the 168 on the 445 candle. And then on the next candle, we get both a buy imbalance of 225 and a sell imbalance of 103. And then on the next candle, we also get a buy imbalance and sell imbalance at the same level, a 137 and a 305. Now, here's what's important. There's not only is the imbalance is going to show you where contracts were aggressively bought and sold in the market. It's always okay, Jay, that's nice, but how do you use it? How do you integrate it into your trading? Well, I'm going to show you how to do that in this example right here. So we come back up. Now we come back up exactly to 2105. Now if you look left from this 515 bar all the way over back to the 430 bar, that's where the first sell imbalance, that's the first bar where the sell imbalance showed up. In other words, the first place where contracts were sold aggressively, that showed up at 2105 quarter. So shouldn't it be that if we are going to go higher in this market, we need to get around that 307, that 307 contracts sold aggressively? Okay, so if we want to call them sellers, 300, the 300 aggressive and 7 aggressive sellers, we need to get around them for this market to go higher. But what happens? We come up and we reject that level. Okay, and so now you start looking at this. Okay, the 305 aggressive buyers on this level, on this candle at 515, they still couldn't get the market higher. So if aggressive contracts bought can't get the market higher and aggressive contracts sold is suppressing the market or pushing it down, who's in control? Obviously the sellers. What happens? We go down again. The very next bar, 530, there's a very small buy imbalance, 77. We've been seeing triple digit buy imbalances up into this 2105 area, and now we just get a simple 77 buy imbalance. The market pushes up. On the next bar we get at 545 we get a 368 buy imbalance, but up at the top we've got a 48 sell imbalance and a 217 sell imbalance. And look where we go to this time. If we draw back exactly, it's like a repeat of the first situation. We come exactly back to where that 137 sell imbalance is. Now remember, there's that 305 buy imbalance. If we get above that 305 buy imbalance, there's a good chance we're going to go higher. But the market stays below that 137 sell imbalance, and on the very next candle you get a 145 sell imbalance coming into the market. There's 135 buy imbalances near the bottom, but they're not being respected. The next bar, more aggressive selling coming in, 239, 718. Another aggressive buyer tries to come in, 337. Nope, nothing happening. The next couple bars are kind of neutral, and then we kind of form a swing low. And then look what happens again. This little move up here, where do we stop? Take the top of the wick of that candle, and where do we stop? Right back at exactly where we've got two imbalances in a row here on those 545 and 6 o'clock candles. 217, 145, boom, market goes down again into the US Open. So how can you use that information? Obviously, knowing where the market is likely to stop is going to provide you with different the ability to have some very nice trade locations. Obviously at 2104 that would have been a great trade location, or even one tick below it at 2103 3/4. The previous one, 2104.50, you probably wouldn't get filled on there. There's only two contracts at 2104.50, but even one tick below that, 2104.25, you could have got filled at that. You had a couple opportunities there. Same thing up at the top. Maybe you couldn't get filled at 2105, but 2104.75 was definitely a possibility. And now look at where the stops are in these trades. In the first one, it would have been the top, so 1, 2, 3, 4 ticks. The second one, 1, 2, 3, 4 ticks again. The third opportunity, that was that at 8:15. We came up again, 1, 2, 3, 4 ticks. So all of these trades could have been taken on the short side. If you were looking for short side trades, all of them could have been taken with 4 tick stops. Okay. Oops. So why are the trade imbalances important? The trade imbalance can show you who's being aggressive in the market, the buyers or the sellers across different prices. Can keep us on the right side of the market, as it obviously in that example, as we came up to the 2105 price area. Obviously we didn't want to be on the buy side because the aggressive buyers had basically dried up. The imbalances can also provide us with locations to enter the market. I gave you 3 examples of it on that chart. Great entries with low potential drawdowns, and they can provide us with locations to place our stop losses and also trail our stop losses. Now before we end this video, I just want to share a couple screenshots. Just give me one moment here. I'll just pause it just for a second. So here's a couple screenshots of a trade I took yesterday on the S&P. And look, I was in at 2102, okay, short. I'd taken 2 contracts, alright. I already took my first contract off with 3 ticks, and my initial stop had only been 3 ticks. And you can see, if I blow this up a little bit, when the market came up into this 2103 area, okay, basically you can see across, this is another 15-minute chart again, you had 1109 sell imbalance, 512 sell imbalance, 108 sell imbalance, all at the 2103 level. So once the 2103 level is holding, and then I see more aggressive selling come in, you have this 2750 here. Well, geez, I went in at 02. My max stop was 2103.25, 5 ticks. Okay, and you can look at the charts if you want to. You can go back and look, but basically that, this trade was a nice one. We ended up going as low as, went about 10 points from this level yesterday, 2102 all the way down to 92. And so this is on a 15-minute chart, but it's the same thing on a this is a better Renko chart. Okay, it's a 4 better Renko chart, and the same thing, sell imbalance, all right, and aggressive sellers pushing this market down. I took profits at 2096. So I hope this video can help you with your trading. If you have any questions about the NOFT, or you want to schedule a one-on-one presentation, please contact me. You have my email there and the order page as well, and comment on this channel, and subscribe to this channel. And I hope to continue to provide useful content for you and for traders who come by and take time to watch these videos. So I hope it helps. Have a great day and trade well.